Adam.
Hello, Boomer.
Thank you so much for having me here today. This is an absolute pleasure.
No, it's a delight. I'm glad we could find the time.
Yeah, and I've been waiting to have this conversation for a very long time. There's so many things I want to tackle with you.
Well, let's tackle away.
Okay. In light of current markets, and this by all means is not necessarily a financial markets podcast, but as you kind of look at the world today, and particularly through the lens that you do in financial markets, how have your indicators changed? What do you look at in the markets to kind of determine the status of the world and the world markets today?
So it's so funny we should enter with that as our entry vector. So someone asked me, or rather commented about a week ago, she said, wow, I can totally understand your passion for financial markets. And I said, it's not a passion for financial markets, it's a passion for human beings. And so financial markets are just the portal that reveals the thinking of everyone on the planet. And so really, you know, if you care zero about financial markets, you'll want to hear the following. So human beings are future oriented, right? We're goal oriented, and we try to anticipate what's going to happen in the next second. In the case of walking down a sidewalk, right? You don't want to stumble, or what's going to happen a day or a year or 10 years from now. And so investing is when anyone makes an investment. I'm not talking about day traders, but when anyone makes an investment, they're expressing a view of the future. That's all they're doing. And so the investment is just the means by which they express the view. And you get some people who express their view via stocks, right? They express their view about the world using stocks. We call those stock traders. And there are people who trade currencies, right? And they express their view of the same world using currencies. And bond traders do the same thing. And when I say the world, it could be a subset of the world. It could be banking stocks, right? Or it could be oil, right? Or small cap stocks, whatever it is. They're still attempting to formulate a view of the world, and they express that view, which is to say they bet on that view in whatever those domains are, right? And most of the time, Boomer, people, sophisticated investors, agree about the world. For example, you and I are in Bel Air today, and if I asked you, what's the weather like today? You'd probably say,
pretty damn good.
Yes, pretty damn good. We both agree on that. But like more specifically, you would say, well, it's sunny and it's warm, right? Maybe some people might think it was very warm, maybe even not quite hot. But neither of us would say it's scorching, and neither of us would say it's cool. And so most of the time, investors are and by investors I mean people who it is their profession to understand the world and make bets on the world. And most of the time they agree. Like if I asked everybody in Bel Air, what's the weather like today? Everyone's going to agree with what you and I just said. And so trends change when one group begins to form a different opinion. So let's say metal traders begin to go, you know, it's not so hot anymore. I think it's going to be cold tomorrow. And so they'll begin to express that view via metals. And so what I do, my system is a very sophisticated analytic framework around anticipating the anticipation of others, which is a reference to a John Maynard Keynes quote. So I look for when two groups of traders, say metal traders versus oil traders, disagree about the world, and then I assess which one is right, looking back at history. And so So, for example, this is something that would interest your listeners. Whenever bond traders and stock traders disagree about the world, the bond traders are right 95% of the time, and early, right and early. So if I want to anticipate what's going to happen in the stock market, I will look to what the bond traders are saying about the world. So, for example, you asked me about my indicators, right? And so all of that was prelude to get to my indicators. So one of my indicators, and I've got dozens, these are leading indicators. Like they'll tell me today what's going to happen tomorrow, or today what's going to happen in a week or two or a month, is investment grade bonds versus U.S. 10-year treasuries. And if you're listening and you don't know anything about financial markets, that probably sounds like Greek. But anyway, it's the way bond traders express their view of the future. And if they're optimistic about the economy, in financial terms, they're bullish, they will buy corporate bonds and short U.S. treasuries. And so that ratio moves in lockstep with stocks, always, until they don't. And when that ratio begins to diverge, the bond traders are right and early. So I know when the two are moving in lockstep, and then all of a sudden the bond traders start moving off this way, then I know the stock traders are going to follow soon after. So I can front run the stock traders. I'll know ahead of time that they're going to go, uh-oh, we've got to go that way, before they know it.
So rather than looking at something like high yield versus U.S. Treasury and looking at that spread, you focus particularly on investment grade?
Well, so now we're getting down into nuances. So high yield.
I'm happy to dance with you.
No, we can dance on anything. But I'm thinking about, like people listening, are they going to want to know about these nuances? But no, you can, and then you can look at the high yield versus the investment grade. Like all those are, you're quite right. Those are, the high yield space tends to be dominated by riskier companies, of course, and those tend to be in, over the last 10, 20 years, energy stocks. So the high yield bonds can outperform the investment grade because all of a sudden the energy companies are outperforming. So what had seemed riskier now, in fact, they're a lot less risky. So which brings me to another point. You asked me about my indicators and how they change. Is that some have backtested decades and they're eternal, but some, their regime changes. So in other words, the world will change. So sometimes rising interest rates is a good thing until they rise too much too fast. Then they're a bad thing. So there's a little bit of art. It's like 95% of what I do is algorithmic, but then there's a little bit of art going, oh, things have changed. And so I've got to take the indicators with that in mind. So for example, December 2016, I was on the Tim Ferriss podcast with, it was a group podcast live with Ramit Sethi and Josh Waitzkin and Tim, and I revealed to the world one of my top leading indicators of 10-year yields, which is the price of copper divided by the price of gold. And for the last 20 years, that ratio has led 10-year yields every single major turning point, either to the upside or the downside. So that ratio, I could predict 10-year yields better than Janet Yellen, the Fed chair at the time. And it wasn't me predicting them, it was the metal traders. And then soon after that, lots of famous financial types started mentioning the ratio. And the thing is, right now, this year, the ratio has shifted because they don't understand the dynamics of it. So right now, it actually is not working. In fact, it's kind of the opposite. It's gold, and it's actually doing the reverse now. It's totally the opposite.
And so when you see something like that happen, and you mentioned the dynamics of it, can you go just briefly into the dynamics of these two particular commodities?
You mean why that's so?
Yeah. Why does
Okay, so
why
sure.
the dynamics of it change matter?
Okay, so again, we're getting into deep finance stuff. Well, it's that. No, wait. I'm Boomer. I'm happy to talk about anything. We can talk about alchemy if you wanted to. Not that I know anything about alchemy, but I was just thinking about your listeners, and if you think they would find this fascinating, because it is actually interesting. So I said all investors try to make sense of the world, and so let's just talk about bond traders and metal traders, and they're both trying to make sense of the world outside that window. And if bond traders think that economic activity is going to pick up, they will think interest rates will go up, so we should sell bonds, right? Other things equal. And because bonds and interest rates move in opposite directions. So metal traders who are looking at the world, if they think that economic activity is going to pick up, they will go, oh, we're going to need industrial metals like copper, and we're not going to need gold. Like, why would you leave money invested in gold which doesn't do anything? In fact, gold costs you money, right? You've got to store it. The way to think about gold is it's shiny copper that you have to store, and you have to pay for the storage cost plus the interest, right? So again, bond traders will sell bonds, and metal traders will buy copper and sell gold. So that ratio in bond traders selling bonds expresses exactly the same view about the world. So when bond traders think interest rates are going higher, and all of a sudden metal traders start thinking it's going lower, I know that the metal traders are right. And in a month or 2 or 3, the bond traders are going to wake up and go, uh-oh, we were wrong, and chase the interest rates to the downside. So yeah, but the dynamics have changed. That's a little arcane to get into that in this right now about why it's shifted. But I mean, why now that what had worked for 20 years has now flipped and it's working in the reverse. So anyone who listened to me back then in 2016, and really there are a lot of high profile hedge fund guys that have mentioned that ratio since that podcast. If they're still following it, it's going to give them exactly the opposite signals.
So I wanted to take everybody on in through this vector using your words.
Sure.
But because I wanted to get more into how you almost systematically are able to break down and simplify relatively complex subjects. Take, for example, the SETs and your work at Princeton Review. But is there a process that you go through?
Well, it wasn't work at Princeton Review. I started it with my partner.
Yeah, that's very
yeah. So the underlying process. So that's really interesting. So I say this, and people think I'm being like falsely modest, but I actually have a hard time understanding things, and my working memory is probably significantly below average, and so in other words, I can keep very few things in my head and still retain the ability to think. Like most people here, I'll give you an example. So if I asked you to remember a phone number, a 7-digit phone number, you could do it without much...
Not too much effort.
Not too much effort. So if I said, remember this phone number, 323-986-1429, you could probably do it. Now if I said, in what year did the last Olympics fall on a year ending in a 0? At that point you have to start to think, right? And as soon as you begin thinking or even accessing your memory, you're going to have trouble remembering the number, right? It's going to, a lot of those neurons that had been devoted to holding onto the number are now devoted to, okay, let me see, when was last year? And was it 2010 or 2000 or 2020? And actually, they didn't have it in 20, right? So I'd have to go back to, actually, I have to think about that. It's probably, there was no Olympics in 2010. I was thinking Summer Olympics. Mm-hmm. Anyway, so so there's a trade-off between working memory and your ability to think. Mm-hmm. And the more things you load your short-term memory with to think about, the less capacity you have to think. And so I, like for example, global financial markets. Mm-hmm. There are thousands of variables someone could be looking at, right? U.S. interest rates compared to German interest rates, or Japanese equities, or gold, or the price of oil, or a million different things. And I can reduce the world down to a handful of variables, like usually fewer than 5. That if you know how those are doing, now the 5 can shift as a regime shifts, but if you know what those 5 are doing, it'll tell you what everything else is doing. And so it's with the Princeton Review, for example, it came down to, it's really interesting, so I didn't set out to start a tutoring company, right? Mm-hmm. I thought I would tutor when I got out of grad school as a way to support a budding writing career. I thought that was going to be, and I thought, oh, how am I going to do that? And I thought, oh, I know what I'll do. I'll tutor kids. And I didn't know anything about tutoring. I'd never tutored anybody. Never once. And I didn't know whether I'd be any good at it. I didn't know whether I'd like it. And I didn't at the time know, boomer, whether there'd be any market for it. Now people today go, well, everyone gets tutored. Well, yeah, that's because I started the market. Back then, no one was getting tutored. And so people were getting tutored if you were failing school, right? Your parents wouldn't want you to go to summer school or have to repeat a grade. So then they would get tutoring. But it never occurred to anyone that, because I don't think they knew it was possible, that even at the high end you could raise your score a lot. Mm-hmm. And the way to think about a world-class athlete. They always have coaches. It's not like, and everyone's always looking for an edge. This is kind of a fun story. I once was at a social gathering and I struck up a conversation with a fellow, and I said, after some time, I said, so what the heck do you do? It wasn't my go-to question, but it's after, 15 minutes of conversation. He said, I'm a private coach. And I said, really? What do you coach? He said, I coach world-class athletes, professionals, and a few Olympians. He said, yeah, I have no shortage of clients. I actually have to turn them away. And I said, wow. I said, what do you coach them in? He said, their reflexes. I know, right, exactly my look. I went, what? Reflex? You're a reflex coach? Mm-hmm. He said, yeah. Yeah, reflexes are really important. Whether it's a 100-meter dash, you got to explode out of the thing, or the 100-meter freestyle, you still got to explode, or anything. You're a quarterback. You got to snap the ball, right? It's ultimately it's reflex time, right? And I said, really? I said, wow. So, because he was like, some of the top athletes in the world. I said, really? So how much can you improve someone's reflexes? And it goes just like this. He goes, Adam, sometimes as much as 3%. But that was his mic drop. Sometimes I thought he was going to say like 50%. He said sometimes as much as 3%. And at that level, 3% is the difference between a gold and, or in tennis, it's your number 1 or your number 47th on the world rankings, right? That little difference. And so I didn't know anything. And my first student, I thought I would tutor kids to support a writing career, I thought. Mm-hmm. And I thought, okay, so how do I find students? And, I had a law degree from Oxford, and I graduated from Wharton. But I knew if I went to Wall Street or a law firm, I would never write. I'd never find the time. So I wrote to every private high school in Manhattan, where I lived at the time. And I thought, okay, so, and I remember there were 31, because I had to type the same letter on my mom's typewriter 31 times, right? Right? Dear Dalton, dear, right? Dear Spence. And there were word processors, but they were like $20,000. Like they were really expensive. And anyway, so out of that mass mailing, and I said, if you have any kids who want to prepare for the SAT, I'd really appreciate it if you would send them to me. So I sent that out, and out of that mass mailing, I got a single student, one. And I still remember her name is Joanne. She went to Columbia Grammar. I'm not going to say her last name. Anyway, she was scoring about, I think about 1,300, something like that, which is pretty good, you know. And her mother called me up and she said, "We got your number from the guidance counselor at Columbia Grammar, and we'd like to engage you." And I said, great. And so I went to see Joanne, and mind you, I had never tutored before. Imagine a doctor. I'm going for a house visit. I have no clue what I'm doing. So I show up, and I get to talking, and you know, I said the first session is my getting to know your daughter, and then I said okay, and by happenstance, they released the SAT for the first time. The year I started, it had always been like there was one release test, and that's all they used for decades. But that year, the New York State passed a law. They said you have to publish every test. So I got my hand on a few. Anybody could. And I gave her a test, and I said, okay, you take this test, and next week I'll come back and we'll go over it. And so, great. So I said, have your mom proctor you. So she takes the test, and the next week I come back, and I don't know what I'm doing, right? So I have to buy myself some time. So I said, let's begin by grading your test. I thought that was a reasonable thing to do. And so I graded her test, and each question type starts off easy and gets medium and hard, right? So there were antonyms, right, opposites. There you go. Easy, medium, hard. And then sentence completions, easy, medium, hard. Everyone had always known that. And analogies, every type of question arranged in order of difficulty. And when I finished grading the test, I noticed something really odd. And I was about to understand how to crack the entire SAT. In fact, all standardized tests. And I said, because she got every easy question right, so there were no careless errors, and she got every medium question right, but she missed every single hard question. Every single one. And what puzzled me, again, I'm groping for something to say because I've never done this before, and is that she'd cross off, say, choices A, B, and E. She's got it down to two choices, C and D. And whichever one she chose, the answer was the other one. And I said, Joanne, what you doing here? I'm really not following this, because you should be able, when you get it down to two, you should be getting at least 50%, right? Eeny, meeny, miny, mo. You're betting zero. I said, so could you just tell me your thought process? And she said, well, I cross out the ones that I know are wrong. I said, good. Then what do you do? She said, well, I pick the one that I think is right. So I blurted out, well, Joanne, you got to pick the one you think is wrong. And then I went, oh my gosh, I just hacked the entire SAT. And because I now had a roadmap of knowing that on the hard questions, the answer was the least plausible looking choice. It had to be. That's why they were at the end. And that was the first of many insights. And in fact, the testing service had to change the test a bunch of times. They had to remove entire sections because I showed kids how to answer analogies when they didn't know the words, and really cool things that were fun for me. I think that's a key thing, fun. But it was really just my leaning into Joanne, into all the students, and trying to figure out a way that they could make better use of what they already had. You know, it's something you and I talked about. Figure out a way, right? Okay, you know, for example, If before I came along, if a tutor or a teacher was showing a student how to do an analogy, say, anarchy is to chaos, say, and a student didn't know what anarchy meant, then the teacher would say, well, to answer the question, you have to know what anarchy is. And I said, okay, well, what if you didn't know what anarchy meant? Is it possible to answer the question just using thinking and applying it to the choices? And yeah, I figured out a way to answer the question when you didn't know what anarchy meant. In fact, sometimes when you didn't know what either of the two question words meant. And like, let's say the sacrosanct is to heretical. Let's say you didn't know either word. I showed students a way to go through the choices that you could sometimes figure out the answer and sometimes get it down to like two choices. Anyway, so it's all, really, if you think about it, it's kind of the key to everything is figuring out a way to do things, and not to assume that, oh, I don't know something or I can't do X. Well, okay, you can't do that. What can you do? Like, always focus on what you can do. I think that's really, really a key life principle and business principle and everything. What can you do?
I want to come back to that what can you do thing in just a second here. But when it comes to these systems that you develop for relatively complex topics, whether it's when you started the Princeton Review, financial markets, some of your looking at artificial intelligence, is it all just discerning patterns in the information? Or
Okay, so it's funny. Actually, you just triggered an insight. You said the subjects are complicated. That doesn't mean what you're observing is complicated. It's the subjects themselves that have gotten complicated because people don't think at a fundamental level what they're actually doing. So someone said to me once, a big Wall Street type, when I was much younger, and I just started the Princeton Review. He said, "So what's the secret behind what you do at the Princeton Review?" I said, well, I thought for a second. I said, okay, it all boils down to this: easy questions have easy answers, and hard questions have hard answers. And he said, really? That's it? And he didn't understand what easy was and hard was, because people take those words for granted. And in your question about simplicity and stuff, Charlie Munger said, really the secret to investing, or I think it's the secret to anything, certainly in careers, is to take a simple idea and take it seriously.